How's it going, everybody? It's your boy KcgTRADES, and I have a quick video for my fellow investors, or soon-to-be investors, hopefully after this video, as I want to talk about a way to make money with minimal effort, like literally no effort. Okay, I'm going to talk about how to invest if you're too lazy or too busy using exchange-traded funds, or ETFs for short. Now, this is a simple but effective investment strategy to gain about an average of 10% annually. Now, this is just an average and is always changing, but this means some years your return for the year might be negative, some years it might be 20%, but overall on average, it will be around 10%. Now, of course, it's not the greatest, but hey, it sure beats the mutual funds your financial advisor recommends or the 0.5% your bank gives you every year. Okay, so on average, 10% a year for doing nothing sounds pretty good to me. Now, this strategy is best for those who really want to grow their money, but may be too lazy and don't want to do their own research, maybe have no idea what to do or how to invest in the stock market, maybe already investing but aren't good at finding, picking, or even holding stocks, or maybe they just don't have the time, they don't want to manage their own money. If any of these sound like you, investing in ETFs are definitely a great option to put your feet in the water and get started. So, for those who don't know what an ETF is, I'm going to explain it for you so you get a better understanding. An ETF is a type of security, like a stock, that involves a collection of securities that often tracks an underlying index. Alright, so for example, regular stocks are just companies, and when you buy them, you're basically investing in the company. However, it is quite different with ETFs. When you buy ETFs, you're not buying one specific company. You're buying whatever the ETF tracks. Now, think of it as buying a basket with a whole bunch of goodies, and the goodies are different stocks. Okay, to make it even more clear, the SPY, SPY, is an ETF that tracks the S&P 500, which is the 500 largest companies in America. So if you buy the SPY, you're basically buying a basket of the 500 largest companies in the US. Okay, and an ETF, it trades on an exchange just like a stock, and it can be bought and sold throughout the day, just like a stock. So now that we know what an ETF is, I want to talk about what the benefits are of an ETF. And there are so many, but I brought it down to 8. So number 1, it is actively managed. So this is perfect for those who don't want to manage their own money, as a portfolio manager or institution is taking care of it for you. Number 2 is you're investing in multiple companies. Sometimes you want to invest in many companies but don't have the capital to do so. With ETFs, you'll still be able to invest in these companies while not having the extreme risk of buying each one individually. You'll be able to get a little piece of each pie, but also have that security and safety net. Number 3, you get a strong and guaranteed returns over time. This is true as long as you buy ETFs that track indexes like the S&P or the Dow Jones or the Nasdaq. Indexes are made to go up and will always go up over time. As long as you're buying the correct ETFs, you're gonna make money. Number 4, it is a low minimum investment / cost per year, so you're not paying much to keep the ETF active. Number 5, diversification, as you're not buying and risking everything in one stock, like I mentioned earlier. Number 6, easy to buy and sell, as you can do so anytime throughout the trading day with just a few clicks of a button. Exactly the same process as buying a stock. Number 7, many brokers have no commissions for buying ETFs, so you can save extra money. Many brokers have no commissions at all anymore, especially in the United States. I'm waiting for Canada to hop on board for that. There are a few brokers with no commissions, but I don't like them. So I'm waiting for Canada to hop on board for that. But this is an extra way to save some money, especially if you're going to be continuously buying the ETF over time and gradually adding to your position. Not having any commissions definitely saves you a lot of money. And number 8, it is cheaper / easier than buying an index fund. As with index funds, if you don't know, it can only be bought or sold at the end of sessions, while ETFs that track the index funds, it can be bought anytime throughout the day. Okay, so now that we know that ETFs are a great investment, what is the way to invest in them? When do we buy? When do we sell? Etc. etc. So the strategy for this, the best way to do so is to buy, add, and hold. Okay, so these investments are intended for 5+ years. Anything longer is even better. So 10 years, 20 years, even better. And the goal is to buy, add, and hold, like I said. Since these are long investments, you want to buy or add when there are big drops in the market. One like we had this past March when COVID hit. Big market drops tend to occur every couple of years, and this past March there was a huge market drop. So these are considered great opportunities to get low risk entries with higher returns, as you could just start building a position when the market drops heavily, or if you are already positioned in the market, these are great times to add to your position to lower your dollar cost average, or just to get more shares at a lower price. As like I said, the market always goes up over time, so anytime you get a huge drop, it is a great opportunity for you to buy shares to get quicker returns. Okay, and I'll actually show you the charts after this for the most popular indexes, the S&P, the Dow Jones, and the Nasdaq. And in regards to this, you also don't want to look at it daily. Markets fluctuate every day. We don't know what's going to happen from a day-to-day basis, but what we do know is over the long term, these indexes will go up over time. It is a proven fact. So, like I said, these are the 3 most widely recognized index funds and the ETFs that correlate with it. So the S&P 500 Index Fund, their ETF is the SPY. The Dow Jones Index Fund, their ETF is the DIA. And the Nasdaq 100, their ETF is the QQQ. Now, like I said, these are the 3 most widely recognized index funds. So if you want to get a general feel for how the market is doing, just look at these. The SPY, the SPY, S&P 500 is the most commonly used tool for looking at how the market is doing. So when people say the market is doing bad, the S&P is usually doing bad. When people say the market is doing really well, the market is at all-time highs, usually the S&P 500 or the Dow Jones are indicators of how the market is doing. Okay, so just remember that. If people ever talk to you about the market, think about the S&P 500 or the Dow Jones, and you'll know how the market is doing. Okay, so now that we know the most popular ETFs and correlating ETFs to the index funds, I want to go through some charts with the ETFs to show you good points to add, good points to start positions, so you know and you're ready to start investing in the stock market. Okay, perfect. So I have the SPY pulled up here. Like I said, is the S&P 500 ETF, and I'm going to show you a 5-year, 1-day chart. If you see the growth over time, it is consistently going up with sometimes huge drops in the market. Like I said, we can't avoid huge drops in the markets. We don't know when they're going to come. Sometimes we could sidestep them when we see specific chart indicators showing us to sell. However, that is for more of the advanced traders. For investors in ETFs and index funds, you don't care if it drops. You're actually encouraging it to drop because it gives you opportunities to add to your positions. All right, like I said, over time it continuously goes up, and the times you want to add to your positions are, like I said, huge drops. All right, so if we see here, we had a huge drop in the beginning of 2018, a $30 drop. It's not a huge drop compared to what we've seen in March, but look here. Every time huge drops in the markets, you want to add around. You obviously can't know when the bottom is, but you just want to keep adding over time, and after a year, after 2 years, after 3 years, it'll go back up. In March, we had a huge drop from February to March, so about a month drop, and look how quickly we recovered. This is obviously very uncommon, and 2020 has been the craziest year in the world as well as in the stock market. But look, if you were able to pick up positions in March, April, even beginning of March, even April, even May, your position is doing fairly well. All right, so that is the S&P 500. I'm going to look at the QQQ, which is the Nasdaq ETF, as you see here. The QQQ has outperformed the market this year, as technology is what QQQ and the Nasdaq is focused on. The technology sector has been killing it so far and will continue to kill as we've shifted to online, stay at home. All that is in the technology sector. If we see here the huge returns in 5 years at $94, now it's at $300. All right, so you're gonna make money if you invest in these over time. and especially add to your positions every time the market drops. One more is the DIA, which is the Dow Jones. It's another huge index fund that people track. It is less companies than the S&P. The Dow Jones is only 30 companies in the stock market compared to the S&P, which is 500, or the NASDAQ, which is 100. So this is an indicator as well of the general market. Now, I don't usually use the DIA because it is very small. There's only 30 companies, like I said, but it is still widely recognized in the world today. All right, so you want to add with huge market drops, and you're going to make money over time. Also, to add, these are the 3 most popular index funds, like I said, but it doesn't mean these are the only ETFs you could invest in. There are new innovative ETFs out there coming out every day, and one popular one is ARK. I'm sure many of you have heard of it. ARK is one of the most innovative ETFs out there. It is led by portfolio manager Cathie Wood. She is a genius. She is a great innovator, and she has a lot of respect to her name because of the performance and returns she's been getting over the past years. As you see here, this is ridiculous. $16 to $125 in less than 3 years. In about 3 to 4 years. Basically, anything that Cathie Wood does is respectable, and you'd want to follow her because she is a genius. They have a few ETFs. One is ARK for innovation, one is ARK for next generation internet, and these also are very good to invest in for the long term. You're putting your money into a very smart woman that will pretty much guarantee you money. If you want to know exactly what stocks you're buying with these ETFs, it is very simple to search it up. We could just go to Google and just go to ETF.com for specific ETFs. It is, as you see here, 2,365 ETFs. It's a crazy amount of ETFs. If you just want to look at what SPY is holding, the S&P 500, you could just search it on the website. And it shows you here. Sorry, let me just find it. SPY top 10 holdings. You want to view all. It shows you all the stocks you're investing in if you buy the S&P 500. All right, so the top 10 holdings would be Apple, Microsoft, Amazon, Facebook, etc., etc. You could do this for any ETF, the NASDAQ, the QQQ. Just go to ETF.com and it'll help you out. In regards to ARK, you could just go to their website. I have it pulled up here. It's arks-funds.com. Shows you all their innovation, shows you why you should invest in them. Shows you that they're focused on innovation, which is beautiful, especially during this time. Innovation is all that really matters now. It shows you their holdings for their specific ETFs. You see here all their holdings, so you know exactly what you're investing in. You're not blindly investing in an ETF. You want to make sure you're investing in companies that you also believe in, but also have proven track records. So Cathie Wood, investing in Tesla, Roku, Invitae, Square, Teladoc, Zillow Group, Spotify, and it shows you their weight as well. So Tesla, Cathie Wood has $1,573,195,000 in Tesla. So I think she believes in it. She believes in these companies, and she has reasons for it. Like I said, go listen to what she says. Go do what she does, and you'll make money. In regards to that is pretty much it to my video. If you did like this video, please like, subscribe, and also want to show you guys my Twitter real quick. It is basically my everyday process of my trading. If you could give me a follow, I'd really appreciate that. But besides that, I just want to say thank you very much for watching this video. Share it with your friends and family. Tell everyone to start investing now. And thank you again for watching. Take care.